I would say 2016 is going to be more of the same of what we saw in 2015. I would say that the global economy should continue to grow at a modest pace, and I think with the recent Fed rate hike, chances of further divergence in terms of monetary policy is going to be there. So I would say that when you look at that, we do feel that there will be a lot of other issues at play. China definitely is something that people will be watching very closely. And also the commodity markets. I think with the recent sharp falls there, the question is, are we going to see a rebound or are we going to see a continued trend or weakness there? I think China's slowdown depends on how much it slows down. I think if it slows down to within what people are expecting, which is about 6.5%, which is the official number, then I would say that markets will take it all right. But if it slows down too much, then definitely there will be some other issues coming into play, how it affects emerging markets, how it affects the flow of funds, capital flow of funds out of China, and indirectly how much the yuan, the Chinese currency, devalues over the course of the year. So all of that definitely is going to have some major impact, and that's why I think China definitely will be something that people will be watching very closely in 2016. Equities on an absolute basis on the global markets do not look as cheap as they were back in the last few years. But when you compare the different markets, so when we look at the US, when we compare bond yields in the US relative to where the dividend yield is, the market looks at fair value. But when you look at the same parameters in Europe and in Japan, you find that those markets, the equities still look cheap, even after their recent performance. When it comes to equities, I think developed markets should outperform emerging markets. We still favor markets like Europe, Japan, where not only do you have the central banks doing quantitative easing, but also where you look at valuations and earnings growth, both those markets have definitely better fundamentals than, say, other markets like the US. And in emerging markets, it's going to be very selective. I think most emerging markets will still have a lot of headwinds going into 2016. 2016, sector selection will be very important. On a global scale, which is the right way to look at it, we do like things like financials, we do like things like technology and healthcare. But if you look at individual major countries like the US, Europe, and Japan, the sector selection definitely will be slightly different. But I would advise clients to look at them a bit more closely during the year. I would say 2016 is going to be a year where we're going to see heightened levels of volatility, just as we saw it in 2015. As such, my best advice to client is to be a bit more nimble in the way they basically invest. Be careful, be a bit more risk averse, and I think you should be coming out relatively well for the year.